what makes gold pretty unique is that you have very stable, nearly fixed supply on the one hand, with annual gold mine production being about 100 times smaller than the stock of gold outstanding. So the supply side is fairly stable and sticky. And then you have demand that's rising from what I would argue are pretty price insensitive buyers that are buying for macro or hedging insurance motives. The central banks starting in 23, following the freeze of Russia's reserves in 2022. There is two-sided risk to this forecast. On net, the risks are significantly skewed to the upside because our base case doesn't incorporate any additional private sector diversification into gold on the back of the debasement theme.
The dollar is an overvalued asset. It was about 15% overvalued coming into this year, which is part of the reason we expected more dollar depreciation this year. We expect in our baseline scenario the Fed to ease rates, another couple of times this year. The ECB is likely to be on hold for most of the year. The Bank of Japan, as you know, is kind of hiking rates. And so even on a more conventional policy trajectory under our baseline forecast, the Fed easing is likely to provide a little bit more of an impulse to that cyclical move down in the dollar.
Jelajahi cara baru mendapatkan informasi. Download Metro TV Extend sekarang.